Hello, good morning, and this is Wednesday the 9th of May, Victory in Europe Day for those of you who celebrate it. And we start this day with the Australian index, the 200 leading Australian shares. Very, very neat wedge developing here from August of 2011, as you can see over here, and lovely supporting trend line, 1, 2, possibly 3, 4, 5, 6 connecting lines, and we're stalling right here. Now the drop from the highs in May, I believe, has taken shape of 5 waves, and the drop so far has been about 5%. If we zoom into it, we can see very neat decline, which I'm about to label 1, 2, 3, 4, and 5. There is, as always, a chance that we make a marginal new low, in case this was that from where 2 is to 5 was in fact the third wave, and we could make a fifth wave low somewhere around here. But the takeaway from this chart is that not an insignificant rally, possibly about 2-3%, is somewhere very close by. Will probably unfold until the end of May. The next chart I'd like to bring to you is the Italian MIB chart. Now the Italian MIB from the highs in March, here around 17,000, has fallen quite far. It fell over 20%, so potentially entering a bear market to their lows in May following the French and Greek election results. The fall so far, I believe, has unfolded in a fantastic impulsive sequence, which I'm about to label again. Here 1, 2, 3, 4, and very likely 5 here in May. And the third wave subdivides very neatly into little impulse as well. 3, 4, and 5. There we go. So we have waves 1, 2, wave 3, wave 4, and wave 5. And even wave 5 very possibly also subdivides over here in the two little 1, 2, 3, 4, and 5. So far, I believe the Italian index has risen in a 5-wave impulsive pattern off the Monday low. And right now, very likely, we're finishing its ABC correction. If my count is correct, then we should see the Italian index rise a good deal. So at the very least 8%, and very likely as far as 13 to 15% all the way through May. The next chart I'd like to bring to you is the Dutch AEX. Now we have looked at this chart on Monday, and on Monday I did label it as waves 1, 2, wave 3 into the April low, wave 4 into the May high, and wave 5 into the Monday low. I did say that so far the drop from the May high has unfolded in waves 1, 2, possibly a 3. We're expecting a 4 and a 5 down. However, the quite a massive rally from the Monday low, I think, has negated the prospect of another fourth wave, and very likely we may have bottomed in either a 3-wave pattern, or you could say that this here was a little failure, perhaps an A, B, and a little C. In any case, we have a firm stop loss levels for our longs here at 290-250, around this low, and we can go long against that. So going long here on this retracement, stop loss here at the lows, and we're expecting quite a substantial rally, going all the way to 320 probably, which is about just under 10% rally from current levels. And the next chart I'd like to bring to you is the EUROSTOXX, which would combine strong indices like the DAX and the AEX, which we've just seen, with the weaker ones like Italy and Spain. So we've seen Italy. It's quite a nice, very neat, I believe, charting pattern here. So again, waves 1, 2, wave 3 into the April low, wave 4, this time into the April high here, late April high, and possibly a wave 5. Now wave 5 is not particularly clean. I can't with certainty say that this was an impulse like all of these little waves were, but nevertheless it was a large decline, slightly longer than the wave 1 decline. So this pattern looks right, and the rally, most importantly, from 2150 low, Monday low, into the 2250 Monday high, over 100 points on the EUROSTOXX. That's quite substantial, just under 5%. That would have been your wave 1 of A, and we're now declining in wave 2. And I expect this red line, these red lines, to come through, all against this Monday low, so that those would be the fairly certain stop loss levels right here. And so I would expect there to be a 1, 2, 3, possibly 4, 5, A, B, and C, again into the end of May. The next chart I'd like to bring to you is the US capital markets chart. This is the broker-dealers, so the largest constituents of this chart are Goldman Sachs and Morgan Stanley. That's over a third of this index. Now, as you can see, it's a pretty awesome pattern from October lows back in 2011. You have wave A, probably a wave B somewhere here, and finishing here a wave C. Now, since then, we've had a wave 1, 2, wave 3, big drop in April, wave 4, consolidation in late April, and a wave 5 so far in early May. There has been no overlap between waves 1 and 4, so we have a very neat little break. 1, 2, 3, 4, 5. Now, of course, that tells us that we are to expect a 3-wave rally. That can take some time. Again, I expect that to last until the end of May. So quite a remarkable rally at first, then some sort of a retracement, and then something that will make everyone hugely bullish into the end of May. So I expect about a 10% rally here for US broker-dealers. I'm just going to pull up a chart of Goldman Sachs, it being the largest constituent. And we see here again a fantastic pattern from October lows, an A, a B, a beautifully subdividing wave C here. Just could not get any more perfect in terms of Elliott wave. And a very neat impulse so far. Waves 1, 2, 3, 4, and from here, from the mid-April high over here, wave 5 into the May lows so far. So provided the lows here hold, which I think they will, I believe that Goldman will rise about 20 or more percent towards 120 or 123, 124. And just the final chart here in the United States is Bank of America. That has fallen into big support levels here. I believe we're going to stage a bounce all the way possibly back to 9, so that's about a 12 to 15% rally. And the very final chart for today is a chart of US long bond. This is the 30-year bond in the United States, which I believe is finishing a 5-wave sequence from the March 2012 low. We have a 1, I'm about to label that now. We have a big wave 1, wave 2, wave 3, some sort of a triangle, wave 4, and unfolding now so far in May a wave 5. Now, depending where the triangle ended, if it ended here, then the wave 5 is more than done. It could also have ended here, in which case we have 1, 2, 3, 4, 5, also very likely done. However, the 4th wave could have ended there, over here, in which case we have a 1, 2, 3, 4 in a diagonal, and then one more high in wave 5 for the US long bond. Either way, the US long bond is coming towards the end of its bullish move, and I would expect it to drop at least to 154 or 152. That's 6 to 8 points decline. This will very likely coincide with substantial strength in US and American indices. Thank you very much for listening. Goodbye.